Hello and welcome. I want to use this opportunity within this silver chart as I go over the analysis to talk about the strategy that I love the most when trading markets, and that is buy when the markets go down and sell when the markets go up. So therefore, let's assume that you wanted to do that with this particular silver market and you wanted to buy. So you put a buy order here, you put a buy order here, one here, and holy crap, on that day, every single buy order would hit. Let's just even to see me hit this one as well, just because I want to be nice and give you a bottom as well. I mean, yeah, bottom, well, buy orders all the way down too. You put 30 buy orders in, we'll say. So now that you've executed 6 buy orders in the spot, I now need to execute a sell order. And the first one is going to be higher than where this one was. So maybe somewhere up here, which would hit. Then the second sell order, then a third sell order, then a fourth, a fifth, and maybe a sixth higher. So along the way, I was just told that I sold just before the end of November. So I'm going to buy it back, say here, which obviously would hit. And then this one, okay, I'll buy it back here, we'll say. And then this one, we'll buy it back here. And now you see that I'm profiting along the way. Got these 3 buy orders back, and the ones that I placed in from before, well, a couple of them would get hit, we'll say. We'll see now 6 will sell. Maybe we'll sell just one here because we put a sell order here and a sell order here and all that type of stuff. Well, if I sell here, maybe in a bear market, I'm not going to buy until maybe a lower low in here. And maybe I have a buy order here that misses. Okay, so this buy order will be a sell order here. All these sell orders would execute in here. If there was one in here, of course, this would execute. So you'd have a whole bunch of sell orders here. This sell order would get executed buying back here. Maybe this one here would get executed here. And maybe the one that didn't get executed here, well, it got executed back, of course, in here. These 2 buy orders, well, you definitely could sell one of them. Maybe you hit this top, maybe you didn't. But then you go buy order, whatever. Maybe you buy 3 times. And here you sell a couple times, and quite frankly, now you're maybe just buying what you sold the last time. And maybe you got a buy order near a previous low as the next one. That's just one example that I like as one of the easiest ways as far as trading. And then as a manager of your own portfolio, you go to bed or you wake up in the morning or in the middle of the afternoon, you check your portfolio. Maybe you're doing this with 20 different codes. Oh, I bought some of this. Let's say, for example, you got a notification today. You bought silver 1671. Oh, did I now? Okay. I bought 100 units. Let's sell those 100 units at, say, 1735. I'm done. And then I'm not going to get notified again until either silver hits that 1735 sell order that I put in or my next buy order. Let's assume that's at 1608. And if the market just does this, I don't need to know anymore. And that's just a simple way that I like as far as a strategy in trading markets. Now, as far as how this is playing out, it's just going straight up, straight down for the most part. As we've had this straight down situation, straight up, and now it's in the point of going straight down. And it's broken down below the 18 average band, starting to decline. So what are we looking for as far as a good short setup is concerned? I want to see a move back to the band. And anything that breaks, so far this is established support. But if a move comes up to this band and then, you're starting to see it like this, say you're at 1660, yeah, now you can be saying, okay, we're going to 16 low change pretty soon. 60-minute time frame now, or the hourly chart, which is what each of these periods represents. And since the decline in here, the trend has been the same, resisting this 18 average, but not breaking down on the pierces below consistently until now, a little bit of the change. So now we're at the stage where the band's starting to flatten out. Any type of breaks is where you're looking to establish resistance, and then you're thinking, okay, let's assume now we're talking about you were buying all the way down here with that strategy. Buy. Let's assume you about like 5 times. What would be the first place you might look to sell would be a 38.2% Fibonacci. And at this point, you know how to calculate it. Key high. And if this is the low, well, that's going to be that of key low. So let's do some calculations and see what comes up. The high looks to me it looks like around 1774, and the low is in at about 1670. So 38.2% mark in at 1709. 61.8% is in at 1734. If this is the bottom, this thing gets going and it's breaking the resistance, the next up target will work out to be that of 1841. And that's these longer term levels are if, of course, this bottom holds. So with that being stated, maybe you put your first sell order in around 1709. Because if this thing breaks out, I'm going to be looking for a move roughly to about here. So strategically speaking, if I'm day trading something like this and I'm thinking of how the story would move on a attempt to correct the market, is I'd be looking to sell here and then buy back somewhere here closer to the band. Just one possible idea, but that would be where you put one sell target of all the things that you bought. Oh, we got a mark at say you got the 1734. So let's put another sell point right here. That's just one of the ways I would look at it. Maybe another one close to the high, maybe one at previous high, and then maybe another one over 18 or around 18. Just different ideas or how I use this strategy, just trading like dozens of different cryptocurrency markets in that type of fashion. Meanwhile, the weekly chart is really nothing more than a mess, as you've had or encountered the large decline in here that had a very good move because it surpassed many of these lower highs. So that's good. That's good. So how's the correctionary phase holding up? Well, it's holding this low. Yeah, I'll give you that. But since its first move, it resisted the band, lower low, resisted the band, lower low. So 2 lower lows along the way. And on its attempt to get things back again, it's a couple times established resistance, but unable to break out past that key 18 3/4 handle. And now since it's fallen through the band, it's resisting it. Therefore, what do we know about leaving the band? If you see weakness in here, a move down in here, and then the break in here, that could be an interesting situation. I don't know if that's going to happen or not. It's obviously not trading like the cryptos do in a free market society. But a lot of this shows neutrality when you can go over the band, but not make a move. And same thing going below. So a lot of this sideways movement in here. This is all, to me, in neutral territory. Long term, heck, I don't remember actually, when I was just barely in school, if I even was in school yet. I think I barely was in school. Yeah, silver prices were 3 times higher. They've been manipulated for many, many a year since. Very cheap to buy. But even if prices go up, I think, in the cryptocurrencies, I think that the ratio to silver will be going in favor of buying silver and gold cheaper later on, even if you see silver's at $30. Because Ethereum goes up 6 times higher, and silver goes a little over double. There's where I would say that to be the case. Now, if you don't have silver and you have cryptos, I would suggest turning some cryptos into silver, but that's what I would do. I can't do what you need to do yourself. I'm just giving information, but I do think that the prices of precious metals will be much cheaper later when you are buying in such of things like Bitcoin and Ethereum. And let's conclude this within the monthly chart, going back since 2002. And the story makes a lot of sense in the sense of, okay, making this move to this high correctionary phase within this band on the break of resistance. Nice move. Then the correctionary band move again, another break. Deep correction with the economic collapse situation of 2008 when all markets were pretty much crashing. And well, that turned out to be a failed move, fast move, because it made the repeating high of when I was about 4 years old. And if you're like under 35, you weren't even born yet. Therefore, since that point, it's been a steady, decent correction. A little bit of time, a hefty amount in price and duration of time for such. And now it's either moving in a neutrality time correction or it's in the attempt of reverting trend. Because on attempt to revert trend, step one, band, you need to flatten out. Okay, let's flatten it out here. Establish the resistance. There we go. Come back to the band. Okay, next step is taking it out. So I'll say it again. When you see price action in the low 21s, high 20s, and anything little above that as well, you could expect a steady bull market to come into play, because that's the indicator that I'm looking for, is strength from this 18 average in a bullish situation when it's above it. And in here, it was just trying to get into that bull market. So that's what I would be looking for on a play of strength. Now, going back to the situation as I was referring to on the outset, let's assume you were lucky enough to buy all the silver back when it was $5 and you have your sell order in here. Hey, you're lucky enough to buy it back. So maybe you put a sell order, say, in here. You're lucky. So you get lucky again. You buy here. You sell here. You're not going to buy that back. You sell here. Well, you could get that back. Maybe sell at previous high again. Let's just say you don't get that one back, though. But you're going to get one of these. And then you're going to get that back here. And this one will get reached here. And then you're going to keep selling on the way up again. So you might sell maybe here. Or a previous high. Then you have a sell order here. 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 And then from this sell order, maybe you bought back here. Let's assume you didn't sell this one. You got unlucky. Then you buy here. And then you bought here. And then you bought here. Maybe you got this sell in. If you got this sell in, I'd have a buy order here. Maybe have a buy order here. 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 And then a sell order. I want to go here. Here. Maybe another one here, previous high, and then the next one above like 64 or maybe 60. And that's it. This one gets hit, then I'll sell it here. This one gets hit, I'll sell it here. And the game continues. It's how I like to use a strategy to trade pretty much almost any market. I think it's simple. You don't really need to know much about technical analysis. Just percentage gains, because markets go up, they go back down, and as long as when it happens, a move to your desired level, if it happens instantly in one period or 60, so be it. All right, wanted to go over that. Thank you for tuning in. Later today, I will put out another cryptocurrency video. I'll do that in the nighttime session. And have yourself a great day. Bye-bye.